The haggling went on for nigh on 14 hours, but European finance ministers finally hammered out a deal. The hard-won agreement means that Greece has secured another bailout to pull it back from the brink of bankruptcy. But the devil's in the detail. This time round, Europe will be able to claw back its money if Greece fails to meet economic targets. Europe correspondent Philip Williams reports.
After marathon all-night talks, finally came news that a deal had been struck.
We have reached a far-reaching agreement on Greece's new programme and private sector involvement that will lead to a very significant debt reduction for Greece.
The agreement is worth $160 billion in new loans to Greece and buys them a crucial breathing space.
Significant progress has been made overnight that will put Greece in a better position to address the very ambitious programme that it has negotiated over the last few weeks.
The private sector is being asked to bear some of the pain, and at a time of growing anger and resentment in Greece, negotiators went out of their way to acknowledge the sacrifices already made.
The Eurogroup is fully aware of the significant efforts already made by the Greek citizens, but also underlines that further major and joint efforts by all parts of the Greek society are needed to return the economy to a sustainable growth path.
For the Greek government, the sword of Damocles has been lifted for the moment.
Today is a historic day for the Greek economy. We've been given a chance to put the uncertainty of recent times behind us.
Brussels says the deal will secure Greece's place in the Eurozone, but many Greeks believe it condemns them to a cycle of poverty and recession, guaranteeing more unemployed, slashing wages, pensions and reducing working conditions, all of which leaves Greeks wondering, even with this latest bailout, how they'll ever recover. Philip Williams, ABC News, London.
And Philip Williams joins us now from London. Phil, it simply wasn't an option for these talks to fail. What have the two sides given up to strike the deal?
Well, everyone's given a little bit on the edges. The Greeks have agreed to a little bit more austerity. The private bondholders will have to take a larger haircut. And even the European Union and the ECB and the IMF will take a lower interest rate on their bonds. So everyone has tried hard to get over the line. It was a marathon effort, but they did finally get there.
And the big question is, will the Greek government stick to those deeply unpopular cuts after the election in April?
Absolutely, that's a huge question. The government they're dealing with now won't be the government after the election. Those politicians in power now are deeply unpopular because of the austerity. We simply don't know the complexion of that government. That new government might want to renegotiate or even throw the whole deal out the window. So a lot of uncertainty ahead.
Philip Williams in London, thank you.